Morning guys, good afternoon, wherever you're at. Welcome to my channel. So in this video, what I'm going to do is I'm going to take some time to analyze the FAANG stocks. As many of you know, I trade the triple Qs primarily as my index play, but it's important to look at some of the major components of that index to understand maybe where they're heading. So what I want to do in this video is use all my amazing skills to analyze the FAANG stocks, and we'll also look at Intel and maybe a semiconductor index, just so we get an idea of maybe where tech is going, because I am a firm believer that tech leads the market for the most part. Tech is the market. You look at some of the biggest companies in our country are the FAANG stocks, you know, the tech giants. So let's look at that, and tech has actually been holding up a lot stronger than the broader market. So you'll see here, this is the S&P 500. We're looking at a daily chart, and in this last crash from the highs down to the lows, we fell, you know, about 35.5% on the S&P 500. Tech hasn't had that same amount of fall. Tech fell, let's see, from the highs, tech has fallen 30%. You know, 30.5%. So it's holding up better than the broader market. And that's one of the reasons why I'm interested in shorting it as well. There's a lot of people still trying to hide out in the FAANG stocks. It's the buy the dip crew. I think the buy the dip crew for the most part has been buying these FAANG stocks for the most part. So that's why we want to look at this and see if there's an opportunity to capture some of that money when the FAANG trade potentially unwinds. And there's a lot of money in there, so I think that there's a lot of potential for making money betting on the downside. All right, so let's look at Qs, and then we'll roll into some of these individual charts. Then we'll look at the semiconductors, and we'll wrap it up there. So triple Qs. All right, I added to my short position. Sorry, I've reestablished a full short position now in the triple Qs, and this is going back to pretty much everything I've been saying while we were doing this bounce. As we were falling, I kept saying I think we're going to get a bounce, and I actually took a long trade. I said in the video that I think we're going to gap up and then move higher slightly, and as you can see, that's exactly what we did. We gapped up out of this wedge, this downward channel, and we gapped up. We've started to move higher. Now I think it's time to start reestablishing or rolling back into shorts. So I've been adding to my shorts over the last couple of days. I now, at this point, have a full position. And let me show you what I like about this. We have this level here, 192.50, and then I've also got this level right here at 195.50 marked out. And basically, we basically just popped right up into that 195.50 range, and we've rolled over from there. So what can I see? The 195.50 is actually my stop. I don't have that marked out, but sorry to confuse you guys. There's no level there, but I have that marked out as a stop. The level that I was really interested in was this 192.89. But as I noticed this morning, we popped it, started to run up, and then started to fail. So I've added to my position right here. It's a very low risk area to add to my position. My stop is at 195.50, right around there. I'm going to give it a little bit of room. Maybe that's an hourly close above that level. Maybe it's a daily close. I want to see how the market acts if it gets up over that level. But I will stop out, if we get too much upward price momentum from this level, then I will stop out on this trade. But to add to the trade, as I saw it roll really close to my stop and then fail and start to roll over, that's a really low risk area for me because my stop is right there. So I can add, and if I'm wrong on that additional add, then I lose very small. So that's why I added. And I now have a full position. So for me, that's 400 shares. And that's, whoever, different for every person, but, sizable position for myself. And you can see this 192.98. This was the level where right here we had some reactions right along here, and then we popped it and failed. And I like to see that we popped it right here and we've since failed and rolled back below. So if you go to the 1 minute chart, let me bring up my trading platform. It's a little clear right there on the 1 minute. Here it is right here. So I have that marked out 192.70 or so. So we popped it, chopped around, have failed, and now all we've been doing is just back testing it from underneath, kind of consolidating, struggling basically. So what this shows me is that resistance is holding this 192.50 level. It's holding as resistance, and and then we're just kind of struggling below it. So this could go. We could still go higher. Maybe we gap up tomorrow. It's completely possible. Just as of right now, this resistance is holding, and it's showing me that this is a valid reaction level. So if it rolls over here, or maybe rolls over into the end of the day, then that's pretty bearish. So let's just wait and see what happens. Watch it. Again, anything can happen. I just think the risk reward is now to the downside. I think there's more opportunity to make money shorting again. So let's flip back to the charts and we'll get into some of these other ones. Okay, so again, and I tried to mark out this upward channel. We have this upward channel. It's not the cleanest upward channel. I was just trying to mark it out, see what we got there. Yeah, maybe it's something like that. You could even mark it right there. That's not bad. Yeah, so I guess we're looking for a break of this channel, but this is a 1 minute chart. So going back to my hourly, I like to use the hourlies. They keep me sane. Looking at 1 minute, you just get chopped to bits. I end up over trading if I watch the 1 minutes too much. So I constantly, throughout the trading day, I'm always referencing back to my 1 hour charts and even my daily charts, just to make sure that the charts are behaving as I would expect against the levels that I've marked out. That's just a little tip for new traders. If they're looking at the 1 minute charts often, you'll end up over trading, and just every little zig and zag on the 1 minute makes you think it's a good entry or a time to get out. And I always go back and look at these 1 hour charts and kind of my baseline levels that I've marked out to make sure that my hypothesis or case that I'm trying to build is still true and valid on these charts. And that's a little trick I've learned. So yeah, I think we're going to roll over here. Let's get into some of these other charts. And let's look at Microsoft. So Microsoft, when I look at this, I see bearish. And here's why. This level that I've had marked out right here, this is your level, your pivot level right now. So we ran into that right here. It was resistance. Then we bumped above it, and it held as support right there, came down. And I just kind of follow along and look at the reactions that take place along this level to make sure that it's valid. Broke down, came back. You can see right here, we held it. These little candles right there held that level. And then we basically traded right near it there, right there, held it. And then right here. So this looks good because we've overshot this level. So that's the fake out or the stop raid that is potentially there. And it ran all the way up to here and then put in the topping candle too. That candle right there, that's like a gravestone doji or a shooting star, I think they call those. And so that's potentially a topping candle. And it's more like a gravestone doji, but basically when you see these, if you see the next candle is a confirming candle. So if a reversal is going to take place right here, then the next candle you'd want to see would be a confirming to the downside candle, confirming that reversal. And that's exactly what we have right here. It's not a bearish engulfing or anything, but still confirming candle on that doji. So that might have been the top of this move right here in Microsoft. So, and we also overshot that level, ran stops. Anybody, who had stops set above this level, maybe run out some stops and then fail. And I think we start to head lower now in Microsoft. So that's what that looks there. That's my read on that one. Going to the daily chart on Microsoft, not the weekly, the daily, still bullish in Microsoft over the bigger picture. You can see here's your decade-long bull market in Microsoft. And we have this upward channel here. So we're still bullish over the bigger picture. Although I do think that we're going to come back down and test this level. And then we'll have to see how the rest of the markets are performing. We ultimately might break this level and run back all the way down here and tag this level, which puts us back, back a ways. Microsoft's been a very strong stock, so it has a long ways to fall. I don't see longer term bearish readings on this as of right now, and so that's just what I see as of right now. Doesn't mean I would be buying the dip or anything, but I'm just saying the chart to me doesn't look bigger picture. Looks short term, this looks bearish. Longer to middle term still looks bullish. Of course, that can change as the bigger, broader markets deteriorate. Then you should see Microsoft follow suit. Let's look at Apple. Apple here. All right. So again, Apple. Black line is your decade-long bull market. Here's your 2009 lows, and you're running up. Held that support. Here's where it got a little choppy. We broke the trend line, back tested, recovered the trend line, and that ended up being a false breakout, and then impulsively failed. And now we're just basically back testing. So as I zoom in here, let's see where we look. I bet we sell off in Apple today, maybe into the close. I think it's likely. And we actually close back below this trend line here. And let me see the hourly, see if we can narrow it down, see if my levels look good. Yeah, I mean, the level, it's a little sloppy, but we've got a couple data points that we've marked this out on. So the trend line's somewhere right in here, but I bet into the close we sell off and get it right down here. And this was a false breakout. That's Apple. So Apple, bigger picture, we're below this black line. We're below the decade-long bull market trend line. We're in a downward channel. We're just slightly above that downward channel, but we're not breaking out impulsively. And it looks like it wants to fail. So if it does and closes back down here, then it could be a back test. This could just be a back test, and then we break and move higher, or it fails and this was a false breakout of this level. So either way, I think it I just don't see this as a bullish chart. It looks bearish to me. Facebook. So this one I don't look at very often. I just don't really have a lot of interest in trading Facebook. I've tried trading it in the past, and it's really volatile and choppy and kind of hard to chart. So I don't typically trade it, but I got this trend line here. It's almost a back test right there. You can see this is a weekly chart that I've loaded up here. Let's look at the daily. You got a couple days here, ran down and hit it there, and then we were back testing from below. Back test, almost did a back test and then failed, and then impulsively failed. See if we can find, here's your gap. We filled that gap right there, and have still moved higher. What do I have marked out right here? Didn't quite get to that one. So all I see in this one, you've got this gap right here. This is in a sideways range right now. I don't see anything. Bigger picture, probably bearish. Let me look. Let me go back to the 2009 lows, see if I can mark anything out here. Oh, sorry. Facebook hasn't been trading since 2009, so I just don't have enough data right on this one to, no opinion ultimately on this one, so we'll move on. Amazon. All right, Amazon, and another one that I don't trade. I don't typically trade the FAANGs, and if I do trade a FAANG, it's usually either Microsoft or Apple. They seem to chart a little cleaner. They've got a lot of liquidity, so I usually chart those. Amazon, let's see here. We've got possible uptrend line that is broken, and we've been back testing. Possible. It's not the... Yeah, could be that right there. That looks a little cleaner. You've got a hour reaction there, reaction right in here, couple reactions that just walked the line right there, then it broke, full back test, kind of do another back test, and we'll see what happens. But ultimately, you broke this trend, this uptrend, if this trend line's valid, and even though you're back testing, ultimately you're probably going to end up going lower. So let's look at the daily here, see if we find anything that makes sense. Yeah, this trend line's there on the daily, so I think that's good. Let's roll it out here. Got some old trend lines that I've been had marked out in the past. Nice clean bull market. Here's your bull market trend line. Looks like we tagged it right there, huh? So there it is. Came down, tagged it, and then we haven't touched it until just recently. Tagged it right there. So, I mean, bigger picture, still bullish. You just have to take it for what it is. Still in a bull market. Amazon's still in a bull market, and has not broke its bull market trend line. So, larger picture, still bullish, and I don't see any reason to short the thing right now. I would just, for me personally, I just wouldn't trade this, because of the other markets like the S&P 500 and the triple Qs being in bearish setups and bearish posture. I'm not interested in being, long individual stock of those indices. So that's that. But Amazon's still bullish, so bigger picture still bullish. In the short term, I'd say bearish. Maybe we run down and tag this trend line again. It looks a lot like Facebook, I guess. Google. All right, let's see here. Looks like a rounding bottom. This is what I see. I'm just glancing at it right here. But this is kind of what I see here. Let's see if I can mark this out. Something like that, rounding bottom. These are typically bullish. You've got your neckline, somewhere right in here. This is your neckline. And like that. And so this pattern, if it plays out, and this is just an hourly pattern, will break higher, wants to break higher. So that's what I see on that one. And then we've got, let's look here. Yep, this is your downfall that coordinates with the rest of the market. And your downward channel. This was a downward sloping wedge, or a bullish falling wedge. We broke to the upside, did some back testing. So this actually still looks bullish. Let's look at the daily chart. See what we got here on the daily. And as I'm doing this video, I'm kind of keeping an eye on my trades as well. And you can see the Qs is starting to do what it looked like it was going to do. Like I said, I expected to probably roll over into the close, and that's what it looks like it's doing. So we'll see if this actually sticks. Google, bigger picture. Here's your Google. This stock hasn't been trading since 2009 either, because they changed the name to Alphabet or something. So I don't really have enough data on this one. I mean, you could say, you've got an uptrend here that you could mark out. Something like that, about right there. That looks pretty clean. And then, we could be a false breakout. I mean, it is a false breakout on that trend line, if that's a valid trend line. And then we've broken. So let's see what we got here on this hourly. Yeah, we'll see. I don't have a whole lot of opinion in the short term. This could be bullish, still go up a little bit. Longer term, looks like we're still heading lower. Let's look at Intel. And then Intel I do chart, and I have traded quite a bit in the past. It's not a bad trader. Intel. All right, let's look at the daily here. All right, so you've got your downfall right there. You've got your pop, resistance right up there. This is a line I've had marked out for a while, so we'll just call that 50s. I'm going to leave that one there. I've got these levels already marked out because I have been trading this. So Intel could, resistance is up around 57.22. We've got a level at 53.32. We've got, these levels right in here. So let's look at the hourly. Yeah, just kind of holding. This looks like this level, 52.40 held, chopping up. So this could continue higher. I don't see anything that says it's not going to. But if the broader markets sell off, then I think Intel is going to sell off as well. Just kind of looking at this level here, seeing what we got. Got some reactions right here along this 54.58. So keep an eye on that one. We'll mark that out as well. You can see I've got a reaction. Oh, on that one I've got a reaction right here, right here, right here, and you know, from above right there. Held it right there. We've now broken, so yeah, we'll see if that plays out. But yeah, ultimately Intel, if it breaks down, probably heading down to this 47.10 or 46, you know, going down. All right, let's look at the semiconductors and then we'll wrap up. So I've got this marked out at 218. Let's see where we get that one from. Yeah, that comes back all the way to here. Little cluster right in here. You can see as we zoom in, held that right there. This candle right here confirms it. You can see the little wick on the candle, on this hourly candle, you know, closed right at it. And we've got several reactions around that level. So I would say that's your resistance, 218. If we pop up to there, maybe just overshoot it a little bit and then fail, that's a potential. Or we just fail here. Like I always say, you know, when everybody's looking at one level, you're either going to fall short or you're going to overshoot it. You don't always have to overshoot it. You can fall short. And if we're going to fall short, then we've already have probably seen the top of this rally, which would have been up here at 213. And that's what it looks like it's doing, because you fell, you kind of sold off a little, tried to recover, but couldn't quite get even back up to the high right here. And then the sellers have since stepped in again. So looks bearish to me, these semiconductors. You know, you've got a big old gap down here, so I would say we're going to go do a gap fill down here somewhere. That's what that looks like, and that's a decent fall. That from where we're at, that's roughly 10%. Not bad. And let's look at the larger time frame here, see if there's anything bigger that we're missing. I've got these bigger levels marked out on this one. I like to watch the semis because they're the kind of the leading edge of tech. So the semis often will, along with the IWM, will give you advance notice of maybe where the other indices are going. So, you know, I have these marked out because this is a pretty clean level right here, down at 143. And then back down here is the corresponding levels that go back to my targets on triple Qs for the longer term, around 173. All right, guys, that's really all I got on this one. Just wanted to cover these tech stocks. This is my preferred way of trading it. I like to trade triple Qs. Let's just wrap up with a summary of what we got going on here on triple Qs. You can see we've got a breakdown of this upward channel that we've been rolling in. So we'll see if this sticks and if the sell-off holds here and what happens tomorrow. But I am fully short now, so took a full short position, added my last lot of shares right up here near the highs. I'm not going to add anything else. All I'm going to be doing is managing the trade that I have now. So got a stop up around 195.50. Could be an hourly close, could be a daily. I'm going to just play that one by ear so each person can kind of judge that one. But I think we head down, and ultimately the thing is that I've got my time frames, my medium and longer term time frames, I'm bearish just because of these bigger picture charts. So ultimately I think we head down to the December 2018 lows of 143 and then we'll probably break those eventually and get down to these targets down here. So that is where I think we're heading. Thanks, guys. Give me a thumbs up. Leave me a comment. Subscribe if you're new. Appreciate it. If you go back and watch some old videos if you want to see how I've been calling this market in the past. Some of the calls I've gotten right. I mean, the big calls, the major macro calls I've gotten right. Whether that was, you know, saying gold was going to go a lot higher when it was down around 1150, 1200, and the gold miners were going to go a lot higher, or whether I thought that the markets were going to break down and go into a bear market based on the bull market trend line that I've had. Yes, if I say there's going to be a bear market, eventually I'll be right. But what I've been calling is this trend line, this purple trend line right here. This is your decade-long bull market, and I've said, okay, look. We broke that. This was my thesis the entire time. We broke the trend line. All we're doing is backtesting and we're going to fail. And sure enough, You know, that's exactly what we did. So go back and watch some more videos. You'll see when we were trading, you know, in here and all the stuff, you know, how I was basically trying to analyze the bigger picture. Even though, you know, I've gotten some of the short-term trading wrong, I've gotten the bigger picture right. So thanks, guys. Appreciate it. Catch you on the next one. Bye.